you on the call. Yes, so yeah, the recording has started. So we have Mr. Kabiru Aremu on the call. I'll be reading his profile shortly. So Mr. Kabiru Yusuf Aremu, he has HND, BSc, ACA, ACTI. That's the taxation certification in Nigeria. So Mr. Kabiru is a seasoned professional accountant with over 5 years experience in financial analysis, financial reporting, tax management, and tax analysis. He's currently a tax analyst at EY Nigeria. That's one of the big four. He's an associate of the Institute of Chartered Accountants of Nigeria, ICANN, and the Chartered Institute of Taxation of Nigeria, CITN. He studied accountancy at the Federal Polytechnic Ado-Ekiti and graduated as the overall best graduating student in 2016/2017 academic session. He also holds BSc in accounting from Ajayi Crowther University, Oyo. As a distinction candidate, he benefited from the ICANN's Diamond Scholarship Award and passed both skills and professional level at one sitting each within 2 diets and 10 months approximately. He has gotten enough experience in tutoring. He has got enough experience in tutoring all accounting related courses as an undergraduate until his final year, and due to that effect, he was conferred the Tutor of the Year in 2017. Due to his zeal for professionalism, he founded Apex Professional Associates in 2019, an ICANN online platform where lectures are delivered to interested students on social platforms such as WhatsApp, Telegram, Google Meet, Zoom, and others. As of today, Apex have over 4,000 virtual students across the nation and over 500 chartered accountant members who qualify through his tutelage. Mr. Kabiru is the author of ICANN Summarized Notes and Past Question Guides, which are available for all ICANN subjects and accessible online. This is an idea that is unprecedented in the history of ICANN tutoring in Nigeria. So it's with great pleasure and joy in our hearts that we welcome Mr. Kabiru to the call this evening. So, Mr. Kabiru, I'm currently having an issue identifying your account because I don't know, Zoom has been giving us this issue where somebody would log on and the person is having like plenty login, the same name for different people, right? So it's not as if she's logging in with different, it's just, I don't know, Zoom is just, we had the same issue last week. So once you can just unmute yourself so I'll know which of the person that will put as a co-host.
Hello.
Right?
Hi.
Yes.
Good evening.
Okay, good evening, sir.
Yes, can we start?
All right, yes, we've started, sir. So I'll just make you co-host in case you want to share your screen or something. We've already started, yeah.
Okay, so good evening, everyone. And then I welcome us all to this wonderful training that is organized by Accounting Job Up. And also, let me say kudos and a very big kudos to Accounting Job Up for this wonderful platform of accountants all over the country and beyond. I commend your efforts. In particular and the whole team, most especially Bayomi, who made all efforts to make sure that I feature in this month's training. And then thank you, Indamola, for that opportunity to feature and then share a bit of my practical knowledge as far as taxation and then taxation practice is concerned in Nigeria. I want to confirm whether you all can see my screen.
Yes, we can. Yes, we can.
Okay. Okay. And also, how many hours do we have in this training so that I can manage my time effectively?
Okay, so we have anything from 1 hour, so it's depending on your availability, sir.
Okay.
Yes, sir.
Okay. Okay. We start. So once again, taxation of SMEs in Nigeria, a contemporary approach. I will want us all to be very attentive. If you can take your jotter and your biro and your pen and put some things down, it will be very okay to do so. And as we move on in the training, I will also advise that you note some of your questions that you have, so that perhaps after the training, Q&A session, you can quickly ask your question and we discuss it out. Also, if you feel that, okay, some of your questions can be dropped in the chat box, you can make sure the chat box and drop your questions. The facilitator, not the facilitator, the moderator will be taking note of those questions and avail them to me after the session. So thank you all once again. So taxation of SMEs. So what is SME? Small and medium enterprises in Nigeria. And in bracket, we said a contemporary approach. So why is that particular phrase important? Contemporary in the sense that there is a lot going on in the taxation industry, in the tax system of Nigeria. So a lot of turbulence, changes here and there, the tax in the taxation law, and a lot of updates in the administration of taxation system by the tax authority, most especially the FRS. So we are going to be looking at the following learning objectives. At the end of the training, participants are expected to understand: 1, business organizations and their tax implications, relevant tax authorities and their jurisdictions, relevant tax terminologies and their meanings, taxes applicable to SMEs in Nigeria, selected existing laws affecting SMEs in Nigeria, current issues in the Nigerian taxation system, filing requirements and applicable penalties, and tips for proper tax management for SMEs. So those will be our objectives. And outline. So the same objective goes for the contents and outline. So we are going to be taking those objectives as outline one after another. So let's start with the business and organizations and their tax implications in Nigeria. So by virtue of CAMA 2020, which is the latest CAMA we have, the Companies and Allied Matters Act, the latest amendments in 2020. Below are the different settings one can register his business under with the CAC. So the CAC, I could recall that in one of the sessions for this month, correct me, Winda, if I'm wrong, one of the sessions was held on CAC registration, right? Am I right?
Yes, sir. Like registering new businesses and their staff with the relevant tax authority. So it was part of it, but we didn't really delve into CAC. We dealt more
Into
with
CAC registration.
yes,
With the
yes,
tax aspect of it, right?
the tax aspect, yes, sir.
Okay, it's not an issue. So we are not focusing on how to register as well. So we are only focusing on the tax implication of each of the settings that an organization can be registered under CAC, Companies and Allied Matters Act. The first one is as a business name. We call that a sole proprietorship. So as an organization, as a business person, if you start a business, you can register your organization as a sole trader, as a sole proprietorship under CAC. So, and that's like a business name. So, if you register your business as a sole proprietorship, the taxes that will be applicable to your business organization are the following: personal income tax, withholding tax, value-added tax, CGT, which is the capital gains tax. Then we have the stamp duties and also pension contributions. If the person wills. So then you can also register your business as a partnership, where you join hands with willing professionals or colleagues or partners, and your business will be registered. If you register your business as a partnership, the same taxes that apply to a sole trader will also apply to your business as a partnership, meaning that partnership as a business itself will not be taxed. So it is the distribution of profits to each partners at the end or in the end of each partners will be taxed under the personal income tax. So same taxes applies to partnership business. So then we move to the commonest, which is if you register your company as a corporate entity, as a company. So which can either be a limited liability company by shares, a limited liability company by guarantee, or an unlimited, or sometimes it can be a private company or a public company, anyhow. So if you register your business as a company under CAC, the tax implication is that it will be applicable to companies' income tax, meaning that the moment you register your business as a company, you have to register with the relevant tax authority, which is the FIRS. And all another persons, we are going to reach there. So you are going to register with not only the FRS, some other tax authority like the state authorities where your business locates or where your employees reside. You are going to register with the tax authority there. And also, you are going to register with other revenue generating authorities like the ITF, because you'll be obliged, meeting certain conditions. The Social Security Contribution authorities like the PENCOM, which is registering registering your employees with necessary PFAs. You'll be obliged to do that. The NHF, the NSITF, and others. Then you can also register your company as an incorporated trustees like schools and other incorporated trustees. Why I deliberately segregated this is because schools as an incorporated trustee, if it registered under CAC, has a different tax implication than other incorporated trustees like NGOs and maybe mosques, friendly societies, humanitarian organizations and the likes. So they have different tax implications, and that's why it's actually separated that. So because schools are obliged to pay CIT by virtue of Finance Act 2021 as amended. So that's about the business organizations and the tax implication, just a neat bit of it. So let's move to the relevant tax authorities and taxes administered by them. This is common. It's not new to us all. So we are all aware of this. So the relevant tax authorities and taxes administered by the relevant tax authorities. Okay, so let's move to the first one. The first among the relevant tax authorities, which is the commonest. So the Federal Inland Revenue Services administers all federal taxes and levies as enacted by the acts. So they have an act that is regulating, that established the FRS, which is the Federal Inland Revenue Service established. So they administer all federal taxes. So then we have state inland revenues, internal revenue services, so which is situated in every state of Nigeria. So every state of Nigeria has their own internal revenue services, with which they administer all state-related taxes. So then we have, we also have the local government authorities. So the local government authorities administer all local taxes. Perhaps maybe tenement rates, land use charges, etc., radio and TV rates. So they administer all those local taxes. Then we have the Nigerian customs, so which administer the customs and excise duties. Industrial Training Fund, who administers training fund that is enacted by a law which brought ITF into place. So I would not want to waste much time on this. All this I just preamble for us to understand the basis. So let's move on to the next. So the next on our outline is the tax terminologies and their meanings. So as a tax person who is practicing taxation in Nigeria, you have to understand the following terminologies. So the first one is tax compliance. What do you mean by tax compliance? We are in the finance sector, in the finance industry. Those who are directly practicing tax and those who are not, studied accounting, or who are doing ICANN or ACCA or anything. So tax compliance, as it is said there, is paying required taxes to the relevant tax authorities and filing returns to avoid penalty. So tax compliance is just following the law. A good example is that let's take for instance the VAT Act, which is the act that brought about paying and filing of VAT payments and returns. So the act said, before it was amended lately, that a taxable person should remit to the tax authority and also file returns on or before 21st of the following month of transactions where he collected the VAT. So that is the law, the act. It is the provision of the act. So and avoid penalty, because not complying with those relevant provisions of the law has huge penalties, and some penalties can be stiff in nature. So that's just about tax compliance, just making sure that on a monthly basis, some taxes are monitored on month, they are paid on monthly basis. So just make sure that, okay, you are remitting the necessary tax authority, tax payments or remittances to the relevant tax authorities as and when due on time without late payments. That's tax compliance. Then tax base. What is tax base? This is the value of anything, any value, any monetary value that tax is assessed on. So it can usually be a sales value or a profit value or asset value. For example, VAT is applied, it's applicable on sales. CIT, company income tax, the tax base for company income tax is profits. Which profits? Taxable profits. That is the profits after you have deducted all your liable expenses and necessary capital allowances. That's the tax base. Okay, for education tax, what is the tax base? Tax for education tax is accessible profits. So tax base is that particular figure or value that the tax is assessed on. So then we move to tax planning. What is tax planning? Tax planning is a way of structuring whereby a taxpayer structure his records, financial records, in a way that it is tax efficient and ensure payment of minimum liability in the legal way by not flouting the law, by not evading taxes. So tax planning is a nexus, is that one that rules tax avoidance and tax evasion. A proper tax planning may lead to an avoiding of tax by exhibiting necessary loopholes in the tax laws and not pay shifting taxes from present to future and not evading taxes. So is a criminal offense as far as Nigerian taxation system is concerned. So that's tax planning. So then tax advisory. This is usually provided by tax consultants. So and then it is very necessary in the sense that a lot is going on in the taxation industry, and Nigerian tax system is very, very complex. It can be complex sometimes because you have a lot of tax laws to abide with. So it might be necessary to actually consult those people that are in charge of managing taxes. That is their own job. So to advise you on optimal management of tax issues, they advise you, oh, this particular transaction, how best can I treat it to avoid tax implication? They will tell you the implication of treating these particular expenses like that. And if you treat it this way, it will be better for you. You are going to have a tax benefits or savings. So that's advisory. Then tax advocacy. Tax advocacy is a situation whereby when there is a tax dispute between maybe the taxpayer and the tax authority, it's an advocacy necessitates somebody like a third party coming in. It might be a tax consultant as well, to come in and actually speak on behalf of the taxpayer, representing the taxpayer on disputes, tax disputes. Interpretation of tax laws can be dicey, it can be so gray, it can be confusing sometimes, that it leads to a lot of forth and back. Some persons, the tax authority will have a different position, the taxpayer will have a different position. In fact, tax consultants will also have a different position. So it can be so stressful and that it may require advocacy, and sometimes it can lead to the court of law, perhaps maybe the TAT, Tax Appeal Tribunal. From there, it can go to the Federal High Court, in fact, to the Supreme Court if it is not agreed on time. So these are necessary tax terminologies. There are many, but these are just few of them that we have to know and be conversant with as a tax person. So let's move on to the taxes applicable to SMEs in Nigeria. I've categorized all the taxes under 3 headings. The first one is the taxes directly suffered by organizations. There are some taxes that is suffered by organizations directly. And what this means is that the taxes are borne by organizations. So, and example of this type of taxes are direct taxes. So direct taxes are taxes that is borne by organizations. So the person that is paying that taxes and the person that is bearing the consequence of that taxes are the same person. For example, company's income tax. it is to be suffered by a company, and it is paid by the company. So this one is the tax that an organization suffers by themselves. Same thing with education tax. Personal income tax, if you register your company as a sole trader, as a sole proprietorship, you also suffer tax. You also suffer tax directly. Sorry for the few break. You also suffer taxes directly. Same thing with capital gains tax. So all these are taxes that is to be suffered by. Same thing with industrial training fund. So it's a levy that is to be paid by a company or by an organization in Nigeria Social Industrial Trust Fund. So all these are taxes that is to be suffered by an organization. Then we have taxes not directly suffered by organization. They only have to pay them and pass across to the next taxable person. So good example of such are the indirect taxes, which are value-added taxes, which is the inputs, the tax you pay as a VAT is not to be suffered by you. The targets, the burden, this is where tax burden comes in. The burden of that tax is to be suffered by the final consumer. So as a producer, you buy raw material and you suffer VAT on it. You have to incorporate that VAT you suffer in your goods and services, or you recover that input VAT from your output VAT, as the case may be. If you suffer it, you pass person in the value chain, maybe the wholesale trader or the trader, and he also passes it across to the final consumer. So these are taxes like value-added tax and customs and excise duties. So these are taxes that is companies are just paying them to pass it across to the next person until it reaches the final consumer. So the burden, the incidence of the tax is on the companies, but the burden is on the final consumer. So then the third category, according to my own classification, this classification is according to myself. So is taxes of others, which companies are obliged, or organizations, let's not say companies, organizations are obliged by law to deduct and remit. Example of such taxes are personal income tax, payee. For example, now payee of your employees is not your tax. It is the tax of your employees. However, because of the payee scheme, pay as you earn scheme, the Income Tax Act obliged companies to register with the tax authorities and remit these taxes on behalf of the employees. Because believe me, myself and you, if the tax authority, if they leave us to say, okay, willingly, we will not pay tax. So, and that is why they put that up on the organizations to make sure that, okay, on monthly basis, so as you earn your income, certain amount of the income you earn that month is paid to the tax authority that month. So this is it's not suffered. It's not suffered by the company. It is to be suffered by the employee because it's deducted from employees' income, from the employee's monthly income. But company is obliged to deduct and remit. And even failure to do that, failure of companies to do that, at tax penalty, we are going to reach the applicable penalties, remittances, and penalties. So if company fails to withdraw, as a company, there is a penalty. As an individual business, there's a penalty for that. So the second one is a withholding tax. You have to deduct on your invoices as you are paying your vendors. You have to deduct withholding tax. Same thing applies to you. If you buy from people and they are paying you, if you sell to people rather, and they are paying you on your invoice, they have to deduct the withholding tax and remit on your behalf. So these are taxes that are to be suffered by, but the obligation is on you, because failure to deduct that withholding, there's a penalty on it. And even remits, there's a penalty on it. In fact, if you pay the person full amount and you did not deduct, tax authority will come and charge you that amount and even apply penalty on it. So money that you have actually paid, you did not deduct, you paid full amount. They will deduct it from you. They are going to charge you, assess you on that withholding that you did not deduct, and also assess it to penalty and interest. So then we also have value-added tax. So value-added tax, for example, output VAT and the VAT deducted at source. So VAT you collect from people. So you have to deduct, you have to collect it. It's not your tax. You are collecting it on behalf of government. You are an agent of the tax authority, and you have to remit it to them. Same thing with contribution. Pension contribution, you are deducting 8% of monthly or annual income, adding your own 10%, a minimum of 10%. Companies are at the liberty of contributing more than 10%, and you remit it to the necessary PFAs. Then also National Housing Fund. National Housing Fund is a deduction from employees' monthly emoluments, but it is to be borne. It is to be borne by the employees. However, it is obliged that companies you deduct these levies and remit it to the necessary authority on a monthly basis. So this classification is just for us to understand how taxes, how they are done, and how it is administered. So let's move on to the next, taking some of those taxes one after another. The first one is personal income tax. I said when I was explaining the business organizations, you said you can register your company as a sole trader, as an individual company. You register it as a business name. So, and if you do so, the tax implication is that you will be assessed to tax under Personal Income Tax Act. So, and Personal Income Tax Act, it administers individual taxes. So, and like I said, persons and income chargeable. So this slide is just a summary of personal income tax. Every other thing is there, but this is just a summary. The first one is the persons and income chargeable. So like I said, this is for those who registered their business as sole proprietorship and or partnership. According to the Act, individual or partners derive income from the following sources: from employment, that's payee. We are not covering that. Like I said, it is a tax that is to be administered by an organization on behalf of its employees. So all we are focusing on is, if you register your company as a trade, as a sole, you are doing your own business, you are a self-employed person. So someone is striking my screen. I don't know who is that, and it is distracting. I don't know. Perhaps maybe the moderator can look into that. It is distracting. So let's focus on, okay, if you are into trade, you are doing your own business, you are buying and selling, and you register your organization as an individual, as an individual organization, as a business name. So you will be assessed to tax under personal income tax. You also assessed to tax under PITA on income generated from profession. Like you are practicing, and that's where partnership business comes, like accounting profession, law professions. You realize that these people, these firms, even the big fours, as big as firms are, they are still assessed to tax under personal income tax because they are partnership business. So the same thing, if you earn income from vocation and any other income that is not mentioned above, so you are accessible to tax under Personal Income Tax Act. So, okay, allowable deductions, payments and filing of returns. These are allowable deductions. The first thing is consolidated with leave allowance. We call it CRA, higher of 1%. or of gross income, or 200,000 naira plus 20% of gross income. So is to be deducted from your total salary on monthly or per annum, as the case may be, depending on how you schedule your payee computation. So we also have pension. Though pension is usually applies in a payee scheme for those people who earn income from employment. It doesn't much apply. Pension and NHF doesn't much apply to an individual who is a self-employed. People are obliged to contribute to pension scheme because we are forced to do so. if they give us liberty. Good example is that of NHF. NHF currently, by virtue of Facilitation Act 2023, which was signed in February 2023 this year, made NHF a voluntary contribution. And a lot of employees are opting out of the scheme, saying, please give me my money. I don't want to contribute it because this one I'm contributing, I don't know, maybe when the time comes, I'll be able to withdraw it. So pension and NHF are not common with a sole trader, with someone who is a self-employed, who is doing his own business, an individual who is doing his own business. So then it is common for those people to actually contribute into a life insurance. So any premium paid, either monthly or annual, paid on behalf of oneself or his spouse, is deducted. It's an allowable deduction. Then we also have all other allowable expenses that passes rent criteria. So we know that are accountants, we are familiar with the rent criteria, which is any expense that we deducted for tax purpose must be wholly, reasonably, exclusively, and necessarily expended in the course of the business. And also, we also have losses. If you have losses in the business, maybe a current year losses or a carry forward losses, you deduct it from your income before you arrive at your taxable profits, and also capital allowances on QCs that you incur for the year for the purpose of business is to be deducted. So payment and filing of returns for business owners, we are focusing on business owners. We are not dealing with payee now. That one is filed on behalf of companies, on behalf of employees by companies. For business owners, they are assessed to tax under direct assessments, and they are to remit their taxes, their payee, their not payee, their personal income tax that is payable by them on or before the 1st of January of the following year, and also file their returns with the relevant state authorities on or before the 1st March of the following year. So let's move to the applicable rates and tax tables. Nigeria practices a progressive tax system, which means the higher you pay. So whereby there is a graduated rates of taxes, and this is the table for the personal income tax. So after you arrive at the taxable income, you apply this table and you pay the necessary. As a business owner, if you register your business as a business name or as a sole proprietorship under CSC, this is the tax that is applicable to you to pay personal income tax. And this has a necessary summary of the necessary applicability. So also, as a business owner, you are also liable to pay to allow withholding taxes. Withholding taxes are taxes. It's an advanced payment of income tax. So people deduct your money and then they pay you in next advance. So at the end of arriving at your taxable income, you have to gather all the withholding tax credits and remove it from your taxable profit to arrive at the actual deduct it from your tax liability to arrive at the net tax liability because you have paid those ones in advance. That's what it means. So an individual is also applicable to company to capital gains tax when it sells its assets at a gain, at a capital gains, and also for VAT. We are going to treat VAT later. So let's move on to another aspect. So let's say for an organization who registers its company under CAC as a company, the corporate entity. So these are the necessary provisions that is applicable to that organization. Let's take the types of companies and the applicable rates. So the Companies and Allied Matters Act are not Companies and Allied Matters Act, the Companies Income Tax Act of 2004 as amended by Finance Act 2019 categorizes companies into three. We have a small company. A small company is a company that has an annual turnover of less than 25 million, and it is to pay tax at 0%, meaning there's no CIT, there's no education tax. So then we have another company who is a medium company. A medium company is a company with a turnover between 25 million and 100 million annual turnover. So is to pay a tax at the rate of 20%. Company income tax at the rate of 20%, and also such company is supposed to pay education tax. We are still going to come to the tertiary education tax later. So then we have a large company. A large company is a company who has an annual turnover of 100 million and above. Once your annual turnover attains 100 million and above, you are to pay tax at 30%. So let's come to remittance and return, and filing of return. Remitting taxes for company income tax. We all know that for a new company is 18 months after incorporation or 6 months after first year end. And for an existing company is 6 months after your company year end. For example, a company that has December year end is to file its CIT returns and pay and file both. So pay and file CIT returns on or before 30th June of the following year, except if the tax authority extends, like they did this year. They extended the filing of CIT by 2 months. So they extended it to 31st of August. So, however, by virtue of Finance Act 2019, there is incentive for those who file within 3 months after their year end. So for large and medium companies, they are allowed 1% and 2% bonus of their tax payable if they pay on time. If they pay 3 months after their year end, if they do not wait for 6 months to pay, if they pay 3 months after their year end. So this bonus, this incentive is only available as a credit against future taxes, meaning that if you pay on time, it doesn't mean that you will not pay the actual taxes you are supposed to pay. You will still pay. If your tax is 150,000 naira, let's take for example, and you are paying, let's say your year end is December 31st, you are paying on or before 31st of March, you are still going to pay 150,000 naira. All they are saying is that, okay, if you are a small company, give you 2% bonus of that 150,000 naira as a credit against the subsequent tax you are going to file. That's how it works. I hope that's clear. So then we come to minimum tax. So minimum tax, every company is expected to pay a minimum tax of 0.5% on gross income, which is the latest amended by virtue of Finance Act 2019. So the 2019 Finance Act exempted the following companies, which is a small company. So SMEs, they have this advantage with respect to if you register your organization as a company, not as an individual, as a company, this benefits applies to you. So because you are supposed as a small company, whose annual turnover is less than 25 million naira, your tax rate is 0%. You're not supposed to pay tax. So if you're not supposed to pay tax, you're not supposed to pay minimum tax. So minimum tax does not apply to you. Companies into agricultural business are also exempted, and companies within their first 48 months of incorporation are also exempted. So we have the tertiary education tax. It used to be 22.5% of taxable profits, but by virtue of Finance Act 2023, which is the latest Finance Act, it's now 3%. And this is effective on company whose accounting year end. That's the Finance Act 2023. Actually, FRS clarified that the assessment time, the effective dates for tertiary education tax, the new rate, 3%, will be effective on companies whose accounting year end falls before 1st of September 2023. So then we have small companies with annual revenue less than 25 million are also exempted from paying education tax. So it's a huge benefit for SMEs in Nigeria if you register your organization as a company under CAC and you earn your annual revenue is less than 25 million. So you are not supposed to pay tax. In fact, for VAT that I hope time permits, we are not also obliged to register and also pay VAT. So we are going to explain that when we reach this. Allowable deductions. So we are used to this. Necessary deductions. All allowable deductions are reasonably, exclusively, and necessarily incurred in generating taxable income. And there are specific expenses that are not allowable. You have to add them back, even if you are deducted them in your accounting profits, and these are the expenses. Let's read them over. So we have the capital allowances. Capital allowances is an incentive. It's an allowance. Call it tax incentive. So it's an incentive that is given, allowance that is given in lieu of depreciation, because tax laws does not recognize depreciation. So they believe that depreciation is an estimate that is born, that is arising as a result of accounting and adjustment. So you have to add this back and you get capital allowance. So this is just a summary of the necessary income tax application if you register your company if you register your organization as a company. So value added tax. So the first thing we are going to take here is the taxable persons. As far as VAT is concerned in Nigeria, the following set of people are vatable persons: individuals and companies. You are taxable under VAT. You have to pay VAT. Government agencies and other NGOs. So who made economic supplies to Nigeria? This is where NRC comes in. In fact, NRC is non-resident companies. Companies that are situated abroad, overseas, and they are generating income in Nigeria. They are supplying service or goods which are consumed by people in Nigeria, are also necessary to register. They are obliged to register with the Federal Inland Revenue Service, because they are supposed to pay to add VAT on their supplies and remit it. However, it is being administered in a way that we call it a self-charge. It is a deduction at source by the companies that they are dealing with those NRCs. So this is a very elaborate area, though it's interesting. By virtue of Finance Act 2019, small businesses with annual revenue less than 25 million are exempted from paying VAT. So if you are a small businesses, whether company or individual, once your revenue is less than 25 million annual, you are supposed not to pay VAT. So people that are invoicing you should not charge VAT. If they charge VAT, you may approach them and inform them that, okay, this is your status of your business. You are earning, your revenue is less than 25 million on annual basis, so they're supposed not to add VAT. on the invoice they are sending to. Okay, then we have registration for VAT. Registration for VAT, all vatable persons, either individual or company, are obliged by virtue of Section 8 to 10 of the VAT Act to register with the FRS and obtain the tax identification number, and also regularize their registration on TaxPromax, because that is the platform we use in administering and managing VAT. So once your annual revenue is more than 25 million, you have to register, and also all the government agencies for. By virtue of Financial Act 2019, small businesses with annual revenue less than 25 million are exempted from registering. So a small business, they brought in, they want to ease doing of business as a small business, whether as a company or whether you register your business as a company or an individual. The tax system of Nigeria wants to ease the burden of tax on you, and that's why they are giving all these benefits to you as a small entity. Weights of taxable goods, as far as VAT Act is concerned, in the law, we have 0% and 7.5%. So, and this is a dicey area. A lot of people they get this wrong sometimes. When you ask them that, okay, how many rates we have for VAT? Some of them will be like, oh, it's only one rate. So it's not one rate, we have two rates, because it is mentioned in the Act, 7.5% and 0%. So this is very clear. I make sure I explain goods and services supplied to Nigerians and consumed in Nigeria. Then zero-rated items included goods and services purchased by diplomats and goods purchased for use in humanitarian donor-funded projects. So it is to be, which means it's more like, okay, you are charging nothing on that. It looks like as if they are exempted, but there's a difference between zero-rated and exempt, and then exempt goods and services. So I'm going to explain that after we get to recoverability of input VAT. So let's go to the goods and services exempts. So by virtue of the first schedule to VAT Act as amended and as supported by VAT modification order released by the finance minister, the following so from VAT, and then these are the goods and services, basic food items. They have a list of goods and services, and finance had come. A series of amendments have come since the Finance Act started to include or remove, amend, alter these exemptions as the case may be. So we cover VAT recoverability or allowable inputs. The only inputs that is allowable to be deducted from output VAT are those that are used directly, or those inputs you pay on stock that form part of your production, that are used directly in the cost of sales or in the cost of production. Those are the only inputs VAT that are to be deducted or to be recovered from your output VAT. So the Section 17 of VAT Act specifically states that input VAT you suffered as a result of overheads or general administrative expenses should be expensed in the POL accounts, and those that you pay as a result, you suffer as a result of capital expenditure should be capitalized together with the assets. So remittance and filing of VAT returns. So VAT returns, according to the Section 14 of VAT Act, as amended by the recent Finance Act 2023, there are two filing dates. We now have two filing dates. The first one is the general filing or remittance dates, which is on or before 21st of the following month of transaction. So this one is common to a lot. And we have there is another filing date, which is for government appointed VAT agents. FRS appointed some agents to deduct VAT at source. And these are MDAs, oil and gas companies, MTN and Airtel, and other entities that deduct VAT at source. So you are to remit that VAT on or before 14 of the following month of transaction. So that's about VAT. So we also have other taxes. These are just the prominent taxes. We have withholding tax. Withholding tax is not a special tax. It's just an advanced deduction of income taxes, as the case may be. So it's a tax that, okay, it is the person that is paying you as a company or as an individual have to deduct, and you have to get the credits. Now, by virtue of the current tax formats that FRS uses, it is for companies. It is now automatically managed, where you have to see, you get your credits in your tax formats, and at the point of filing your company's income tax, the credits will be utilized against your company income tax alone. For CIT purpose alone. It is not to be utilized against education tax or police fund or NASENI or IT levy, as the case may be. Then for individual as well, you have to use your credits against your personal income tax for individual businesses. So that is about for withholding tax. Then for CGT as well. So CGT is administered when we get to the filing requirements and penalties. I'm going to say something about capital gains taxes. Because of our time, I'm actually trying to make sure I delve more on those that are notable amongst those issues in the taxation system and practice in Nigeria. What are the current issues? What is going on at the moment that you have to know as a person? So we have the Finance Act 2023, which was signed into law on 20, and it was it's supposed to the effective dates assigned in the law are supposed to be on 1st of June. So however, FRS have come to say, okay, they have suspended the effective date of Finance Act 2023 to 1st September. So meaning all the necessary applications will now be, a circular was released yesterday, which was circulated wide to remind taxpayers and assure them that, okay, the effective dates for all the necessary provisions of Finance Act 2023 is now 1st of September 2023. And that gives taxpayers comfort for those people that registered their company, their organization, or their business as a company. So then, another thing you have to know is the Business Facilitation Act of 2023. It is not popular, but it has come with a very sense-making amendment that has made business owners made their life easy, as the case may be. Some of the amendments that this Business Facilitation Act has come up with is the amendments relating to CAFA. So CAFA is a certificate of acceptance of fixed assets. It is one of the conditions stated in the law in CETA for any company to have their capital allowance valid. Once you have a qualifying capital expenditure of 500,000 naira and above, you have to get this certificate from the Federal Ministry of Trade, Commerce and Industry. But this amendment has actually increased that threshold to 5 million, which makes life easy, either for business, for an individual business, or for companies. That's okay. Businesses that they have small qualifying capital expenditure, you do not need to be bothering yourself about obtaining, because you are having less assets than 5 million naira on that year. So once it is above 5 million, you are obliged to get CAFA for that. So another amendment that this particular business facility is that of NHF, by saying that NHF is is now voluntary, it's not compulsory, and then making the base, the tax base of that NHF to be not to be 25% on basic salary, now 25% on basic housing and transport. But it's now voluntary. As a company, you may write, just notify your employer that, see, okay, NHF, please stop it. Just make sure you are not deducting it from my monthly income going forward. So because it's not voluntary. So then we have fiscal and taxation committee set up by the president. So this is interesting. Our president set up a fiscal and taxation committee when he assumed office to look into issues of Nigerian taxation system with respect to multiplicity of taxation, different tax rates, and different taxes we are having. So, and it is headed by making Dr. Taiwo Yedele FCFCTI as the chairman of that committee. And they started working with the relevant stakeholders to make sure that, okay, the Nigerian taxation system makes sense for people that are doing business. And this is a very good move. So they have made some move that, okay, the taxes we are paying is reduced and it is reasonable. And also make recommendations to the government that, okay, taxpayers get benefits for the taxes they are paying. Those are some of the current issues in the Nigerian taxation system. We have a lot, but these are just few. But let's move to the filing requirements and applicable penalties. We have the tax type, the rates and tax basis. We have the due dates for filing or payments, and we have payments penalty for non-compliance. So for company income tax, it is to be charged. We have 0% or 20% or 30%, depending on your revenue threshold on taxable profits. So tertiary education tax is now at 3% on accessible profits. So due dates for filing and payments 6 months after the company accounting year end. For new company, it is 18 months after incorporation or 6 months after first accounting year end, whichever is earlier. Failure to file returns for CIT attracts 25,000 naira in the first month and 5,000 naira for each month the failure continues. In addition, late remittance attracts 10% of the amount not remitted as penalty plus interest at the prevailing monetary policy rates. Currently at 9, and this is now done on compounding basis because FRS, even the tax pro max, you realize that once you do not pay, the interest is now done on compounding daily basis. So, and it is necessary that this is paid on time. So the next current deadline for CIT filing is 31st August. So companies, you are working with organizations, whether an organization is a company or an individual, most especially companies rather, you have to actually notify them that if they have not filed, to file on time. So we have the VAT, value-added tax, 7.5% on compatible supplies. So on or before the first of the following month. And however, FRS appoint collection agents, they should remit before 14th of the following month. Like I said earlier, failure to file returns at 50,000 naira in the first month and then 5,000 naira for each month. The failure continues by virtue of Finance Act 2019. Late payment attacks 10% of the amounts not remitted as penalty plus interest in monetary policy rates, currently at 19%. So I'm going to amend that. That is cut. And also there is a penalty for not registering for VAT and also not registering for CIT. That's taken later. So we have withholding tax, 2%, 2.5% to 10% as the case, depending on the transaction. For FRS remittance, on or before 21st of the following month for state inland revenue service, state internal revenue services, or state authorities on or before 30th of the following month. So late remittance at 10%, an amount not remitted plus in monetary policy rate, currently at 19%. So that's for withholding tax. So we also have capital gains tax. So that's 10% of chargeable gains. So, and it is administered twice a year, 30th of June for disposal within the first half of the year, and 31st December for disposal within the second half of the year. So no penalty has been stated for non-compliance in the CGT Act for now. So we have pay as you earn, or for individual companies, personal income tax, using the tax table. So monthly remittance is due before 10th of the following month, annual filing before the 31st January of the following year. But for for self-employed, those people that are doing their own business as an individual, so you have to pay the relevant tax on or before the 31st of January and file on or before the 31st of March. So that's for that. Then penalty for non-compliance, that 10%, non-remittance at that 10%, plus interest rates, which ranges between 15 to 21% in parties. Let's 100,000 for corporate entity, 50,000 for an entity or individual business who does not remit or file return, most especially filing return, who does not file returns for on behalf of his employees, we call it from H1, for his on behalf of his employees, on or before the 1st of January of the following year. Individual will be penalized for 50,000 naira, while company will be penalized for 500,000. So pension, these are pension NHF and NSITF are social contributions. So pension, which is 8%, and minimum of 10% of employees across emoluments for employer and employer respectively. So that's on behalf of employees, not less than 7 working days after salary is paid. And then penalty for non-remitting will be 2% of the total amount that remains unpaid for each month, or part of the month that the default continues. So, and the amount for the penalty will be recoverable as a debt owed to the employee's retirement savings account. So the employer we suffer this amount, and a penalty on that amount unremitted to be paid is to the retirement savings account. 2.5% of monthly basic salary, which is now amended, and it is now voluntary. I'm going to amend this before the slide is shared. So failure to deduct apply 50,000 for self-employed person, 5,000 for employers, 5,000 for self-employed person, or 1 year imprisonment or conviction of both. So industrial training fund, this is for companies, which is to be paid, it's to be suffered by companies, and it is to be paid as it is at 1% of annual payroll costs. So, and it is to be remitted on or before 1st of April of the following year. So that is the necessary penalty for non-compliance. So we have employee contribution scheme or NSITF levy. So 1% of monthly payroll cost to be borne by the employer. This is to be borne by the employer. It's not to be deducted from employee's salary. And it is to be remitted to the relevant authority every last day of the month. So penalty of unpaid assessment is 10% of unpaid sum, and it's to be deducted from employees' remuneration. Penalty for deducting from employee remuneration is 100,000 naira for individual and 1 million for corporate entities. So these are necessary. The slide will be shared so you can familiarize yourself with them. So tax management strategies, this is the last but not the least, tax management strategies for SMEs. The first thing is to evaluate your business entity type. Before you register your business, you have to know your tax implication and the benefits for registering your business as an individual business or as a company business or as an incorporated trustees. So you have to actually evaluate your business type and your tax implication. Number two is to take advantage of tax deductions. Tax deductions like credits, withholding tax credits, and other credits, VAT inputs. Take advantage of them. So review your accounting system. Your accounting system is very, very important. You have to structure your accounting system, your invoice, your entries in a way that it is tax efficient, so that you will not be flouting or be accessed to tax unknowingly. So you have to, if you have an invoice whereby you are a service providing entity, let's take for instance, and people reimburse you for money you are spending on their behalf. So you have to actually make sure you separate the money, the reimbursement, from your own income. Maybe call it any name, management fee, commission, and any, as the case may, just call it any name, separate it, so that you will know that, okay, the withholding tax that they are going to charge you income that is due to you. So this is a strategy, it's a tax planning strategy. So to make sure that, okay, you are structuring your invoice in a tax efficient manner, and make sure that you are keeping your books properly. Make sure you are entering, you are posting your entries in a way that is tax efficient. Your narration should be clear. You give your narrations in a way that is understandable. Relevant narrations that will not be questionable by the tax authority. And also keep your records straight. It is not a slang that unless you have evidence, you will explain to the tax authority. You will explain. Just make sure you have evidence for all your records that you are keeping. So then number 4 is the leverage tax credits, such as withholding tax credits and other credits that is available for you. Make provisions for tax payment. Make sure you are actually looking in your books. Make sure you provide for tax payment before you arrive at your profit for the, and adjust for the provision at every year end. Adjust for under or over provision. By the time you are computing your taxes, or as the case may be. Number 6 is you stay updated on tax laws and changes, so that you can benefit from all these incentives that tax authority is bringing incessantly, most especially lately. Then number 7, which is very, very important, is to make sure that you get yourself a tax consultant as friend. So you might not officiate this. This might not be official, or maybe you are registering or you are hiring a tax consultant. Just have a friend who understands all the necessary tax laws, and make sure you engage the persons each time you have a doubt. Each time there's a transaction, whether as an individual, as a business owner, as an employee, just make sure you get insights from your colleagues, from people that are working in tax consulting firms that understand taxation and add the taxation practice. Because it's one thing to know how these things are practiced in law. Even myself, before I come for this particular session, I've contacted some friends to get some of their inputs on taxation matters. Okay, how do you view it? What is your own view? How do you see this? How do you explain it better? It's very, very key. So, and that's with this being said, that comes to the end of our session for tonight. In conclusion, I will say that we keep ourselves abreast of the necessary tax laws. And if you want to register your company, make sure you make findings. Ask questions. Before you register your company as an individual, there is a tax implication. before you register your company, your organization rather, as a tax implication. So make sure you are asking questions, consult, ask people, okay, how do I do this better? How do I do this better? And do not make sure that you are benefiting from all the necessary tax laws and the tax benefit that is available in the applicable tax laws. And if you are in doubt, please ask, consult people. Make sure you are consulting people. Keep yourself abreast of necessary tax laws and then ask questions. So that ends our session for today. Thank you for attending this session, and so for the enforced decorum from you all. For those people that are striking my screen, thank you all. I also appreciate you. Any question? Let's take it.
Yes,
So,
thank you so much, Mr. Kabiru. Thank you so much. We really appreciate your time. So for the purpose of, because we are recording currently and we don't want the recording to be rowdy, right? So I'll be taking the questions. Please, let's drop our questions in the chat room. I was not able to get previous questions because I was switching between my laptop and my phone. So please, I'll be taking the questions that are currently in the chat room. But if you know that I've not taken your questions or your questions are not currently in the chat room
okay,
now,
Oinda, let's do it this way. Some people, some persons are raising their hands. So if you have a question, please raise your hand. So raise your hand. So that we are going to take it in that order. So what should we just do is to make sure that those people that raise their hand can unmute them and let them ask their question. So let's hear their voice. Let's hear their voice. So we are mature enough not to distract this session.
Okay. Yes, the recording will be available. So I'm waiting for people that are raising their hands. I've not seen anybody. So in the meantime, I'll take the question from the chat.
I can see some persons. I can see some persons raising their hand, but
okay, so
because the chat room question come first.
Okay.
The chat room question come first, so you can take that.
Oh, okay. So I don't know why I can't see it from my end. Probably you just unmute them. I already made you a co-host, but I don't know. I can't see them from my end.
Okay, I'm going to unmute them.
All right, sir.
Go ahead with those questions in the chat room.
In the chat room. Okay, sir. So somebody is asking that, okay, Rhoda is asking that a company that registers a small business with employed staff but doesn't deduct payee on the staff salary, what's the effect on the staff?
Okay, so that's a very good question. So the effect on the staff is that the staff, let's take it one after another. There is an effect on the staff and there's an effect on the employer. So like we said, as an employer, whether you are a company or you are an individual, you are supposed to deduct payee and remit to the relevant tax authority on behalf of your employees. So if you are not doing so, as an employer, there's a penalty for that, which is 50,000 naira for not doing so and for not filing on annual basis. So that's the impact on the employer. So then for the employee, the impact is that you will not get your tax clearance certificates. You will not get, you are not tax compliant. So, and each time an issue arises and you need a tax clearance certificate to sort that issue, because you are not paying tax, so you will not get tax clearance certificates. That's number one. Number two is that tax clearance certificate can be useful for you, perhaps in this era of Japan now. You might get to the bank and you want to do something, and bank will ask you of your tax clearance certificate, and you'll be running kata kitty in getting your tax clearance certificate. So the implication is that you are not tax compliant and you will not be able to get your tax clearance certificates. That's the implication on the employee. Fine, you are getting your money because you are not different from people in the informal sector who are not paying taxes. So if your employer is not deducting payee from your amount, that is the implication. That is the implication. I hope that question It's clear.
All right, thank you so much, sir, for that. So somebody else is asking here that can we have a practical question to cover some technical issues on SITA, tertiary education tax, or any other important calculation. So this is the first time we're announcing this. Basically, we'll be having our paid practical session, like the tax session. Also, I'm sure this is the first time Mr. Kabiru is hearing about it. Definitely,
Yeah.
we'll bring him back. We'll talk to him and we'll plan and do everything right. It's just that it's still in the process, so we are still making finishing touches to the curriculum and all. So that's still in the plan. So we'll also let our community members know over time too. Then the next question is, what happens to companies that remit pension and payee of staff after confirmation, usually 6 months?
Okay.
I think this person. Yes, sir, you
Right.
can go on.
You wanted to say something?
Did you get that, sir?
I got it. You
Okay,
wanted
sir,
to say something after that. So that's why I paused.
Oh, okay. You
I
can
have this
continue.
question. Okay, I can
Alright.
continue. So companies, what is the implication of companies who only deduct and remit pension only after confirmation? So the implication is that the Pension Act did not say you should do so after confirmation. So a situation will just arise where PENCOM wants to audit that organization, and you will realize that they will penalize that company at the necessary rates of penalty. So, and such penalty will be borne by the company, but the amount will be remitted to the employees. So it is not a good practice, because the Pension Reform Act of 2014 or 2014 as amended did not state you should start deducting or remitting pension after confirmation. So it did not say that. So that's the implication. The company will be penalized. That's the implication.
All right, thank you so much, sir. So okay. There's another question here, that when a company fails to deduct withholding tax and later have to suffer a deduction and penalty, who will benefit the tax credit, since withholding tax is used as a credit for income tax?
Okay, so that's a practical question. So, a company is expected to deduct withholding tax and remit on behalf of the vendor you are deducting the withholding tax from his invoice. So, however, in a situation whereby a company fails to deduct, there are two issues. The company can deduct and not remit. That is one scenario. The company may not deduct, and if the company did not deduct, then they will not remit. Meaning that in the vendor's perspective, or from the vendor's side, if the company did not deduct from your invoice, you get your full payment. So, because they did not deduct withholding tax from your invoice, so you are not expecting any credits. That one answers part of your question. You should not expect the credits because you got your 100% invoice amounts. Okay, now let's now assume that but it did not remit, because that's another case or scenario that occurs. So if the company deducts and did not remit, and FRS now come, or maybe let's say the tax State Inland Revenue Service come and audits the company and discovers that, okay, you did not deduct and you did not remit. So they are going to penalize the company. So, however, whether you deduct or you do not deduct, the practice that tax authorities do is that the amount that is assessed, that is paid, after they assess you, after they penalize you, that actual amount plus the interest and penalty is not to be benefited by anybody. They want you to suffer for it. They don't want the credit to go to even the original person that you're supposed to have actually remitted on. Let's take, for instance, that you even deducted from the vendor's invoice. If you deduct from the vendor's invoice and you did not remit, and FRS come and they assess you and they ask you to go and plus the interest and penalty, let's take it one after another. Let's just bifurcate it. Interest and penalty side. Actual remittance that is supposed to remit that you did not remit, one side. So that actual remittance is what we are talking about. Interest and penalty, nobody is benefiting that. It is to be suffered by you. That one is clear. Now, the actual remittance that they are asking you to go and pay, like an additional assessment. Okay, let's take for instance that the vendor, you deducted this and you did not remit it. That vendor, he has the rights to actually benefit from that remittance. However, the FRS in their practice do not want that credit to go to anyone. So, however, some persons, they have actually argued with the FRS that, okay, this your practice is not backed by law. There is no law, there is no act that says that this remittance should not be benefited by anybody. And they're arguing it. So it depends on how you can argue. If you have actually deducted from the vendor's invoice and you do not remit. But if you not deduct from the vendor's invoice, there is no passing the credit along. In fact, it doesn't even need to come as an argument in the first place, because passing that credit to the person you do not deduct from his invoice is a burden on him. Because FRS can take an approach of withholding tax credits to determine companies' profit sometimes, or companies' revenue sometimes. So if you are giving a credit to someone that does not deserve the credit, you are even shooting that person on the leg because he does not deserve it, did not deduct, so there's no point. So in a nutshell, in practice, FRS do not want that credit to go to anyone. They want to suffer it. So that answers the question. However, if you have deducted by the person, you can, if you can actually do it, because now on tax formats, it is FRS that will assess you on tax formats. So you can't even say you want to upload schedule for an additional assessment. Can't do that on tax formats. So you can't do that. So that answers the question. I hope the person is satisfied. So if not, you can reach out to us in a practical way to avoid wasting of time.
Yes, okay, all right. So I would like I'll allow the people that are raising their hands to so I'm seeing Sunday Samson here, so you can go on. You can yeah.
Okay, good evening. Good evening, ma. Good evening, sir.
Good evening.
Please, my question is based on those writing professional exam ICANN. Now, you told us that education tax rate has been changed to 3%. So, assuming that someone that is writing professional exam by May Diet next year, which is 2024, and maybe you want to compute for educational tax, but the question
in the examination hall, right?
Yes, but in the question they were asking you to compute for maybe the accessible or taxable profit for the year 2022, but this question was as at 2024. But the question there was the question was asking determine the taxable profit for the year ended 2022. But as at 2022, tax rate was still, educational tax rate was still 2.5. So which of the tax rate is applicable? Is it 2.5 or 3%?
Okay, so that's a good question. So the normal tax that is applicable in real life for the relevant tax year will apply in examination hall, except otherwise stated. Please, it's very, very important. Except in a situation where the examiner says always check the back of your questions. The examiner will state the rates at the back of your questions. It is common with taxation questions and advanced tax questions. The examiner will state the rates, the capital allowance rates. So if no rates is stated, in a situation like this where we have different rates for different tax years, for example, as at 2020, the rate we have is 2%. 2021, the rate we have is 2.5% for 2021 FY. So then 2022 up to 2022, then 2023 comes now, and they are saying, okay, all financial year and all companies at the financial year end for before 1st September in that 2.5%. After that, it will be 3.5%. So it will be 3%. Sorry. So now we're having 3 rates within this span of 3 years. So the examiner has to be specific. So if the examiner is not specific, it's applicable for those years in real life. Are you guys anything?
Okay, sir.
Like your question, like your own scenario you paint at 2022 year end, December 2022 year end, 2.5%. So that's what is applicable then.
Oh. Come again, sorry.
I said use 2.5%. You painted. Hello, are you with me?
I can hear you now. So there's one last statement you made.
I said you painted a scenario that in December 2022, right?
Yes, sir.
So December 2022, the prevailing rate is 2.5% and I say profit. So that's what you will use.
Okay.
Next question. Next question.
Yes, the next person should.
That's gifts.
Okay, give.
Go ahead
Okay.
with your question.
I think that is not gift, it's a technical issue.
Blessing.
If there are more than 3 gifts there.
Blessing.
Okay, so who is asking question? Let's say there are some questions on the chat box. So
okay.
okay,
good evening, everyone.
Good evening.
Okay.
Can you hear me?
Yes, I can hear you.
Okay.
Can I go on?
We have a question on pension. What happens to companies?
Okay, go ahead.
What happens to companies that add their own portion of pension to the employees' gross? Let's say an employee has decided to earn 150,000, and in the component of the salary, basic, housing, transport, furniture, domestic, they impute their own pension of 10% to amount to that 150,000. Is it right? Because to me, now the employee has to now bear 18% of the salary. Is it right? I stand to be corrected, but I think it is not supposed to be like that. Please, can you shed light on that, please?
Okay, so if I get your question correct, you said, so in a situation whereby employers is factoring your pay to make sure that all the 18% is being borne by employee, right?
Yes.
Hello, are you there?
Yes,
okay,
yes,
so
that's what.
Okay, so what happens is that employers, what employers do is that they look at how much you are costing them as an employee. They look at how much you are costing them, an employee, or you are paying it on their, and they are paying it on your behalf, or or Pension Act says they should pay it to, how much are you costing them as an employee is what they are looking at. Are you getting it now? So what they do is that the 10% that they are remitting, that the law says they should remit, they should contribute on your behalf, they will add it to your gross amounts. And that's what they do. So because they are looking at it that, okay, how much is this particular employee costing us as an organization?
Okay. Okay.
So they are not flouting any law.
Okay.
Fine. For you as an employee, you may be looking at this is right. So, but what they do is that they are factoring it that, okay, what's your net pay? This is the net pay that you want to collect, Abby. So they will now structure your offer letter in a way to say, okay, how much so they are going to add that all the amounts. In fact, not only the pension, if they have so it will be captured as your gross amount, because that's the gross amount you are costing them as an employee. That's what they are doing. That's what. So it's not. I hope that clarifies.
Yes, it's clear. And my second question is, if you are saying you are like, if you are talking about net salary, is your net is what you take home after everything is after your pension, statutory deductions are deducted, right?
Yes.
So what happens in a situation where probably you've negotiated, someone has negotiated net salary with a company and have agreed to it only for them to now be telling the person that pension will be deducted from that net, because the person that pension is the person's money at the end of the day.
No. So that's not a good negotiation. So if you're getting your pay, make sure they understand your own definition of net, not their own. Tell them that as my own net payment is my take home. So that they can understand. So make sure that they understand that my own net pay is what I'm going to take home on monthly basis. Any amount you are deducting as your own contribution, as my own contribution, no, as anything, no, even as tax, even as tax, as payee, does not concern you. It's your net that is important. So I hope that clarifies.
Yes, thank you. It does. Thank you, sir.
You're welcome. Let's take another question. Maida.
Okay. Good evening.
Go ahead.
Mr. Kabir, thank you very much for the wonderful lectures and insights. I think I just have 2 questions here. One of the I have is regarding the NHF, where you may mention based on the Business Facilitation Act that there was an amendment that was being made to it. So I think you mentioned something of BHT in that aspect 2.5. So I needed to get clarification on that aspect. Then the second aspect is my second question is that regarding the VAT, like all these agents that was being assigned by FIRS to collect VAT, I just want to get one understanding. Was it maybe, for instance, if I have an invoice of 10 million naira given to like maybe MTN, and that 10 million there is a VAT of 7.5. Maybe at the end of the day, I will be expecting 10,750,000 from them. Does that mean that at the end of the day, they are just going to pay me only the 10 million, and from their own end, they will remit the VAT to the Federal Inland Revenue Service?
Exactly, you are correct. That answers your question.
Okay. I think it's clear.
That answers your question. So that's exactly what they do. So what they are saying is that instead of paying that VAT to you to go and remit,
do
not pay to the person. Come and remit it directly to us. And that's why we call it deducted assault. We call it VAT withholding VAT.
Okay.
Or withheld VAT.
All right.
That's what we call it. It's a withheld VAT. So now your second question is with respect to NHF. That's okay. It's now 2.5% of employees' monthly income, not basic salary. So gross income of the employee now, that's what 2.5% is now applied on, not basic salary.
Okay. Sorry, sir. I thought you said housing and transport.
Yes. So housing, basic housing and transport. So sometimes it depends on I'm going to check the ads to see the net definition of the monthly income. So, but for pension, because they use basic housing and transport, so that's why it is being used to say basic housing and transport. However, what is more important is that it's not voluntary. So employee may choose to make his employer stop deducting it from his payments. Is that okay?
Yeah, it's fine. Thank you very much. But I don't know if I can still get clarification again regarding maybe a small company that have a turnover of less than 25 million, which made mention that they might not be paying a VAT or CIT. Okay, what if peradventure, for example, in a year where all their transactions took place, and they have not been deducting VAT, and during when they are supposed to or maybe during when they are supposed to file their annual return, for instance, and there was maybe a revenue rebound, like instead of from January to December, they are expecting less than 25 million, but at the end of the day, they due to the revenue rebound, due to the boost in the business, they're having like revenue of about like 40 to 50 million. So in this instance now, they have not been remitting VAT before during all the transactions that took place in the preceding year. So what is kind of scenario now? How is it going to be dealt with, like with the tax implications?
Okay, sorry. So now, for companies earning than 25 million naira. So though it's a bit of dicey in practice. So, but so I'm going to just try possible best to make sure I provide a reasonable answer to this. I was discussing it with a colleague, and how this is managed in practice. So what tax authority, what they expect is that, okay, let's say maybe from January to June, your annual revenue is still not up to 25 million. So you are not expected to register for VAT, though you are expected to register for CIT, only that you are not expected to pay at the end of the year. So then, but for VAT, you are not expected to register at all, and you're not expected to pay VAT. However, if in July, your revenue exceeds that 25 million naira, then from July, your revenue have exceeded 25 million naira. So that exemption does not apply to you anymore. So now you are expected to now register for VAT. Meaning that, okay, so what they are saying now is that, okay, is it at the point when your revenue now exceeds that, is it when you now be running to the FRS to say, okay, now come on, I want to remit or start paying VAT to the tax authority. However, in practice, what is done is that a company that is not, that is a small business, let's say, a business, an organization that is a small business, for VAT's sake, people are dealing with you, and they do not support, they are going to charge VAT, they are going to add VAT on their invoice. However, you, as an individual who is not registered with the tax authority, you can't even pay to tax authority, meaning that those companies that are dealing with you should not pay you the VAT. So they are and pay them directly. Their own case is like the case of those agents that are to be deducting VAT at source. Because who they are dealing with is a small business and they are not registered yet with the tax authority. So they are not supposed to pay them that VAT. That's a practical issue. However, another angle is that small business is not supposed also to people that is dealing with or people that is buying from. It's not supposed VAT as well. So now for CIT purpose, in a situation whereby, please, someone is displaying his, may just disable your video, please. So in a situation whereby an organization is for CIT purpose, an organization revenue is not up to 25 million. So for a whole year, and not expected to even pay CIT. So however, before the end of the year, your revenue exceeds 25 million naira. So you are supposed to pay. So that's the word annual in that word is very, very key. Annual revenue. So at the point where your annual revenue exceeds that 25 million naira, that exemption does not apply to you anymore. It does not apply to you. So then from then, you have to do the necessary thing as far as registering with the tax authority or remitting the necessary tax payments is concerned. I hope that clarifies. It's a very technical issue in practice, but that's how it works. For people that you are dealing with, that you are selling to, they are supposed to pay you, but they're not supposed to pay you they're supposed to pay you VAT, so they are not supposed to pay you that VAT. Because if they pay you, you won't be able to remit. You are not even registered as a small business. You are not registered with the tax authority. They're supposed to deduct that VAT without VAT and remit that VAT at source. That is what is expected of them to do. And people that you are buying from should not charge you VAT because you are a small business. Then CIT, once your annual for 12 months, that's what you mean by annual, your revenue is not up to 25 million, then no, because you are going to file on tax formats. And once you are writing annual revenue on tax formats as less than 25 million, the tax format is captured in a way to apply 0% on any taxable profit as you are having, and you're not going to pay tax. So that's what it means. That's what it means. I hope that's clear.
Yeah, it's fine. Well understood. Thank you. Thank you very much.
You are welcome.
Yeah.
Please, good evening, sir. Good evening, sir.
Good evening.
Yes, sir. Thank you very much for the section, sir. Please, I have a question. Number one, I'll be glad if we can get this slide, maybe via our mail. So the question actually has to do with the
wait. I don't have your mail. So what we
okay.
What had it been we have
I actually dropped it in the chat. I dropped it in the chat box, and this is a Christina Olumuyiwa.
Okay. Okay, no wala. So some of those people that
hello. All sorry, Mr. Kabiru. All participants that want this slide should send a mail to us. So from there, we'll share the mail to everyone.
Okay, I think that makes sense. So
you
now
send a mail to I'll send the mail on the Dropbox now. So everybody should mail
drop
us.
the mail now so that they can see it. Drop the mail now so that they can see it. Go ahead with your question.
Okay, thank you, sir. So the question I want to ask has to do with the tax planning That is it possible
Okay.
yes, is it possible for a tax planning to be done and without tax being evaded? Is it possible? And if yes,
Yeah.
how we won't go about it?
Yeah, it is possible. So like I said, tax planning is the nexus between avoiding tax and evading tax. So we have a tax avoidance, we have a tax evasion, and tax planning is standing in between. So tax planning is a way of actually seeing something in future, just making sure that, okay, you are foreseeing the necessary things, doing proper things that you're supposed to do, making sure tax planning, it has a list, there's a checklist for tax planning. Part of tax planning is to make sure that you are keeping proper records and your financial records is done in a tax efficient way. Your tax invoice is done in a way that is going to reduce your tax burden, not evading it. For example, I cited an example of separating your reimbursable from your direct profits on your invoice. If you're invoicing your client, make sure that the amount that is a reimbursable, separate it. The one that is your own income, separate, so that if your vendor is charging you, know how much the amount is charging withholding tax on. So all the tax planning has an issue. It has a list to say, okay, making sure you are getting all the necessary exemptions, tax incentive, and buying any asset, and all those things just in a way that, okay, you are going to maximize your tax benefit and optimize your taxes. So that's what tax planning is. Just a way to make sure that, okay, before you are carrying out any transaction, you ask questions. Know the tax implication. Consult those people that knows about tax, and they will tell you the tax implication. So it's part of tax planning approach. So looking at the loopholes in the tax laws, and benefits from it. So those are tax planning.
Okay, sir. Thank you very much, sir. The last question, I actually dropped it in the chat box, but it was not taken.
Okay, go ahead.
For a sole proprietorship business that is registered.
Hello, sir. Good evening.
Sorry. The person that is still asking question is still on. So we are going to take your question after her. Sorry.
Okay,
go ahead.
Thank you, sir. So for a sole proprietorship business that registered with TAC, but the company is still developing, no much revenue yet. But what can the company or the sole proprietor do in that situation? Because we just registered with TAC that, okay, let me register, but the company is still not making much sales, no
operation.
revenue. Yes.
Okay,
It's not,
so
they are having operation, but very on a low key. It's still proprietorship business that the business no much revenue yet. They are not even breaking even yet.
Okay, so
what next?
That scenario is that it depends. Like I said, if you are a sole proprietor and you are registered with the CAC, but you are making business to be on the safer side, you must start with your tax authority, with the relevant state tax authority, so that at the end of you are going to find what you make as revenue, as returns. Hello. Someone is distracting us.
I'll try to check the person now. That's why I even wanted us not to unmute people, like it would cause chaos.
Sorry.
Yes.
Sorry. So I think we are okay now. So let me continue. Okay, so what I'm saying is that as a sole proprietorship, please, after you ask your question, please mute yourself. So once you, if you register your business as a sole proprietorship and there is no much activity yet, so I will just advise you, you have options. You may register with your relevant state authority. You may not, but it's better to register with them and file what you make at year end so that you have the benefit of having your tax clearance certificate. They will only include what you find, or if you have a few tax paid, that's the only thing they are going. You will get your tax clearance certificate. And the practice of the tax authorities, the tax clearance certificate is usually issued when you have filed for 3 consecutive tax years. So if you say you are not doing the right thing as far as tax compliance is concerned, when the time comes and you want to get your tax clearance certificates, is that when you will now start? So that 3 years, it may be stretched. So it's just advisable to just say, okay, just do the necessary thing. It won't cost you. It won't cost you. Just do the necessary thing with the tax authority. And that's all. That's all.
Okay, sir. Thank you very much, sir.
Well, welcome.
Yes, sir.
Okay,
Hello,
I want us to take the last question. Or either, when do we supposed to finish this session?
Okay, sir. So in order not to make the recording too long and too bulky, so we can wrap up soon, we'll just take one last question.
Okay, so please, for those people that will not be attending to your question, we are very sorry.
Yes, sir.
You know me. If you can actually reach me personally, you can reach
Can
out.
I drop your LinkedIn link? Yes, sir.
Yeah,
so
just drop it to them so that they
sir.
can reach out to me.
All right, sir. Okay. All right, who is taking the last? Who is going for the last question?
Sir.
Okay.
Okay, thank you
go
very
ahead.
much, sir.
Right.
Sir,
Yes.
please, my question is on trust and estate.
Trust and what?
This trust and estate, because there's a situation I came across using normally CRA is based on gross income. But this particular question was the CRA was based on the net income to the trustee.
Okay.
So I wanted you to throw more light on that. Thank you very much.
Okay, you are welcome. So, we are used to computation of personal income tax for employees. Are you with me? For employees.
Yes, sir.
So, however, the same rules with CRA that is applicable to employees also applies to other set of individuals, or as administered or as provided for under Personal Income Tax Act, which is, for example, a partnership. Partnership goes along with the likes of individuals or employees because the income is taxable in the hand of partners, not as the partners. So now for trust and settlements, so the CRA that is applicable should be after, there's an amendment, there's a recent amendment for consolidated relief allowance, which says the gross emolument should be after you have deducted your allowable deductions.
Okay.
And for trustees, the allowable deductions for trustees are not pension, they are not NHF, they are the allowable deductions that are relevant to them. Are you getting it?
Okay.
So it is after you deduct that you will now apply your CRA on that amount. So it is an amendment. It's an amendment brought into place by Finance Act 2020 to say, okay, CRA is now applied on gross emolument less allowable deductions like pension, NHF, or in the case of business, you less all the necessary deductions before you apply salary. That's it.
Okay. It's true. Thank you very much, sir.
Thank you. You're welcome. You're welcome. I think we can draw the curtain here so that we can enjoy the rest of our day and not stretch this too longer than this. So I apologies for not attending to some questions. You can reach out to me. If you have my contacts, the LinkedIn link is dropped on the chat box. You can reach out to me as well. So I'm going to attend to your question. You can have the practical discussions. And then let me say a big thank you to Accounting Job Hub Consults for this wonderful opportunity to have given to professionals to attend this month's training free of charge. This is a wonderful training if it were to be paid for. It's worth paying for, but that's a very good one. That's a very good one. Kudos to you and your team, Mola.
Yes, thank you so much, sir.
Thank you so much, well.
Yes, really appreciate your time, sir. You really took time to explain. Like, please, let's appreciate him. Let's send our clapping emoji to Mr. Kabir. Really tried tonight, like more than 2 hours of your time this Saturday. Really appreciate you. Then Yomi will be in contact with you. We still have some other collaborations that we'll still do. So our paid tax training is coming up very soon. So more information will be sent on all our social media platforms. So just stay tuned and we hope to serve you better, basically. So thank you all. Thank you, Mr. Kabir. Really appreciate you. Thank you so much, sir. Sir, would you like to talk about your tutorial center?
Okay, yeah, it's fine. For those people that may be interested, you can join an Apex Professional Associates into ICANN lecturing, and for now we are organizing a free tuition for people. So it's free, it's online. So anyone who is interested can reach out. So for now, we have not even decided on when to go for paid classes yet. So it's free for now. So there's no physical tuition because of my schedule and the schedules of my tutors. So but that online lectures is very, very engaging and very, very helpful. Those people that have joined that can testify to it. So from foundation to professional level. So you can reach out to us and benefit. It's a free online lectures. So thank you for mentioning.
Thank you so much.
Slide, and then at the end of the slide, I'm going to include something for Apex and for another of my colleague as well who requested for that. All right. Someone is asking about ACCA. I don't have time for ACCA for now. Even I'm not exhausted. A lot of people, that's interesting. A lot of people have asked me because I also have summarized material that I prepared. So people have used it and they have benefited a lot. A lot of people are asking, but for now I'm updating them. So I'm going to announce on my social media platform on LinkedIn when they are ready. Perhaps maybe this coming week it will be ready. It will fully be ready for updates. But some persons are asking, don't you have summarized note for ACCA? Don't have summarized note for CITN? I will just like I don't have all the time. This is not my 9 to 5. So we are only doing this for the sake of humanity and for passion's sake. Passion's sake. Wow. So I don't have anything for ACCA yet for now. Sorry to say that. So only I can for now. Thank you so much. Thank you so much.
All right, sir. Thank you so much, sir. I'll be ending the call now and we'll be in contact with everybody. Thank you. Thank you. Please connect with him on LinkedIn. All right. And our community members who can reach out to us on WhatsApp, we'll share the link. Thank you so much, Mr. Kabiru. We'll be in contact with you. All right. Thank you so much, sir. Yes, thank you. Bye, everybody. Good night.
Bye.